Welcome to Value Multicaps. Value Multicaps, SEBI registered stock advisory firm. In our last video of Indian retail, we shared how Indian apparel stocks can create exponential wealth for shareholders. In the series of Indian retail, let's discuss Indian Retail 3, Indian retail going phygital way, omni-channel strategy of Indian retailers. I request everyone to watch and interact with us through our community button in our YouTube channel for any feedback and interaction. To know more about our stock subscription services, please visit our website valuemulticaps.com, where you get access to our mega cap stocks, blue chip stocks and multi-bagger stocks through a personalized login. Future of retail will be a blend of offline as well as online. If somebody has to take a clue from this Kishore Biyani's statement, one business theme which is emerging in India is phygital, a mix of digital and physical. Phygital is the new future of retail. Indian retail future lies in setting up a platform for customers by providing him amazing shopping experience in addition to just price or discounts or freebies. Indian retail apparels, clothes. It is our general perception that clothes been purchased more online than offline these days in digital world. But in US, still 87 to 88% people still purchase the clothes in physical way. China, 82% is still physical. Physical is still larger. The only thing in-store retailing has over and above over the online shopping is online doesn't have its ability to touch, smell, feel and experience which offline store provide. Most online companies gained prominence since 2014 when the battle between Flipkart, Snapdeal and Amazon was intense. As a result, consumers went online and tried to monetize the deep discounts available. With deep discounts coming off, online transactions started falling. Omni-channel strategy, Indian retailers' success mantra. Post bitterly fought wars between the brick and mortar stores, offline stores and e-commerce companies, online stores, players offering a complete and seamless consumer experience. Online retailers are shifting offline. Look at Amazon's tie-up with Shopperstop, a marriage of online and offline player. We anticipate offline stores will start moving to the digital medium to target customers. Also take an example of future retail shifting to Retail 3. Globally, 2.5 million plus consumers are connected to internet. In India, 400 million consumers are connected to internet, of which 300 million are smartphone users. These consumers on an average spend 3 hours a day on the internet. By 2020, India is expected to have 700 million internet users. Out of this 700 million, 300 million will be English users, 200 million Hindi users and 200 million other language users. The digital is a bridge between the consumers and the sellers. This bridge, online can drive offline business as consumer will use both of the platforms. Offline channel offer consumer experience through touch, smell, visible senses, while digital enhances only visible senses but provides assortment and convenience. Going ahead, online and offline channel will be a blended to provide seamless experience. Digital can provide deep understanding of consumer behavior using data analytics and will be used for personalized targeting. Online penetration differs across categories. It varies from high standardization product to low standardization product. Food and groceries versus apparels. E-commerce boom prompted brick and mortar stores, offline stores to revisit their strategies. They realized that certain categories were impacted more by e-commerce. Among categories in retail industry, food and groceries, electronics and low value jewelry are most likely to get pushed on online platform due to high standardization. However, online will not affect high value jewelry, the intrinsic design, while apparels due to low standardization still prefer to be offline platform purchase. Branded apparels deploying omni-channel strategy with online as well as offline presence. Indian retail apparels and clothes are the net gainers in this phygital era. Offline retailers are investing heavily in apparels as margins are higher compared to other categories. Margins in private labels, their own in-house product, can go up to 50 to 60%. Consumers select clothes and shoes from offline retailers but order them online as at much cheaper rate because e-commerce companies are pricing this product at a huge discount. However, now with the deep discounts are off the table, in our view, offline retailers will do better. Shopper Stock has in fact invested 400 million rupees in its omni-channel strategy and expects a 10 to 15% revenue growth in its online sales. Few interesting mergers and acquisition deals which has taken place between online going offline. Amazon, which has tied up exclusively with Shopper Stock. Amazon India now has a right to open outlets at Shopper Stock. Amazon India purchased 5% stake in Shopper Stock, which shows the confidence of largest e-commerce company in offline retailing. Lenskart, the online eyewear retailer, took a step towards building offline presence, given the increasing number of requests from consumers who will still prefer trying products before buying. To be relevant and accessible, physical stores are needed. Thus, Lenskart has 350 stores in 90 cities. Online beauty brand retailer like Nykaa, it already has 8 stores in major cities under Luke and on-trend categories. The Luke stores mostly offer luxury and premium brands. Oppo is also planning to open new stores, Chinese smartphone maker, to sell directly to consumers and add to its existing wholesale business. Walmart Flipkart deal will amplify the domestic retail bloom. One of the largest and much anticipated deal has finally sealed. Walmart has acquired 77% stake in Flipkart for $16 billion, including $2 billion of primary infusion. So how is Walmart Flipkart deal lead to the change in the domestic retail industry dynamics? Online and offline partnerships are likely to get a boost. Online discounting may not necessarily increase, as Walmart may drive private labels, their own in-house product, rather than focus only on branded product. FMCG companies are likely to benefit because of this deal, as Walmart's expertise lies in hypermarket, grocery retailing, plans probably to tie up with a kirana player. So how will this sector dynamics change? India's organized retail is set for a fortunate twist because of this deal. The e-commerce boom has been the emergence of many players, but due to cutthroat competition, many of them eventually shutting shop. The ones who weathered the storm, like Flipkart, Amazon, and Alibaba-backed Paytm, they have emerged stronger. So what will happen with these e-commerce companies with their existing position? Walmart, post the deal, will focus to drive its own private labels. We do not perceive the deal is negative for listed physical retailers. All large physical retailers are moving towards omni-channel anyway, and the probable threat, if any, from this online platform will be limited. Organized retail constitutes only 10% of the overall retail pie, so there is enough room for all the players to grow. We also believe global retail giants could look at large physical retailers for attractive joint venture or acquisition candidate for their India entry. We are positive on few retail stocks with long-term view. To know more about such multi-bagger ideas, please visit our website valuemulticaps.com and subscribe to our stock subscription services for mega caps, blue chips and multi-bagger. Value Multicaps is SEBI registered research analyst. Please visit our website valuemulticaps.com and download free research report. Please sign up into our website to get real-time updates directly into your email inbox. To receive more such informative video, please subscribe to our channel Value Multicaps and please press bell icon to get notified. Thank you.